Good morning, student. Welcome you all once again in the video lecture of India's 12 income taxes. So, students, my name is Alok Garg, and in the next two classes, I'll take you through on income taxes. And students, this lecture is not on income tax. This lecture is on accounting of income taxes, right? So, let me clear to all of you, the title of the standard is income taxes, but this standard does not talks about how to calculate your taxable income, right? So I mean to say, it does not talks about the provisions of income tax. It talks about the accounting of income taxes, right? It talks about accounting of current tax, accounting of deferred tax, right? It talks about these two aspects. Friends, let me share my Excel file. I hope my Excel file is visible to all of you. Friends, talking about the preamble, or I would say talking about the framework of this standard. So if I talk about in India, there is an accounting standard. We already had accounting standard. Which AS on income taxes? It is AS 22. It is accounting standard 22, which talks about accounting for taxes on income. Accounting for taxes on income. Friends, as you know, Ind AS is the converged version of IFRS applicable to India. Globally, in IFRS, there is a IAS 12, International Accounting Standard 12, which talks about income taxes. While the title is income taxes, but it talks about accounting for income taxes, accounting for taxes on income. So from IAS 12, we have converged to Ind AS 12. We have notified Ind AS 12 in India. And again, the title is income taxes. Okay. The title is income taxes. Friends, these are the three standards which are applicable. These are the three standards. In India, accounting standard 22 is applicable in accounting standard in IGAP, right? So till CA Inter, you guys must have read about accounting standard 22. In Indian accounting standard, it is Ind AS 12, which is part of CA final. Okay. So Ind AS 12, we have to read in CA final. Accounting standard 22 was the curriculum of CA Inter, but from the country perspective, AS 22 as well as Ind AS 12, both standards are applicable. The companies on which Ind AS is applicable, of course, Ind AS 12 is applicable on accounting for taxes on income, accounting for income taxes, right? And friends, the companies where IGAP is applicable, Indian GAAP is applicable, accounting standards are applicable. AS 22 is the standard which talks about the accounting for taxes on income. And friends, globally, in 160 countries globally, what is applicable globally? IAS 12, International Accounting Standard 12 is applicable globally. Right? So let's begin the journey on Ind AS 12 income taxes, right? Any challenge? No? Yes. So what we are going to talk about the standard income taxes. First of all, let me clear to all of you. I am not teaching you provisions of income taxes, right? If you ask me, sir, what is the provision of PGBP? How many heads of income are there? How many heads of income are there?
5 years.
There are 5 heads of income, right? Income from salaries, income from house property, income from business and profession, capital gain, other sources, right? So I know these 5 heads of income. Why? Because I am a chartered accountant, right? Otherwise, as a faculty of financial reporting, I would not have been able to know about these 5 heads of income or income tax provisions, right? So to cut a long story short, I am teaching you accounting for income taxes. I am not teaching you provisions of income taxes, right? So when a question will come in exam relating to Ind AS 12, right? So in that case, what question says, for example, if the question will say that this expense is disallowed under income tax, for example, okay, and while, since you guys already have read DT, IDT, right? So might be as per the provisions of income tax, they said that expense is allowable. So don't take your assumption. It's a accounting paper. It's not a income tax paper, right? So you have to go by the question, because the question wants to test your knowledge on accounting, right? The question does not wants to test your knowledge on income tax provision. Is that clear? But if the question is silent, then you can apply your provisions of income tax. But largely, the guidance will be given in the question of income taxes in financial reporting, because it is only talking about the accounting. Okay. Is that clear or not clear? Naman, Selendra, Sanjay, Bibhu, Saminathan, everybody, are you clear?
Yes, sir.
Okay. Yes. So now talking about this standard, Ind AS 12 income taxes, in this standard, we are going to talk about two aspects, right? We will be going to cover about two aspects. Number one, current tax. And then another one is deferred
Deferred
tax.
tax.
Deferred tax. Current tax and deferred tax. Right? What is meant by current tax and what is meant by deferred tax? Current tax, as the name is suggesting, current tax means tax which has to be paid currently. Means whatever you are assessing in your financial year, previous year, that is going to be paid in the form of advance tax or self-assessment tax. Correct? So current tax means a tax which is payable to the government as per the income tax provisions. And what is meant by deferred tax? The tax which is going to be deferred is known as a deferred tax, right? So two aspects we are going to cover in this standard. Current tax aspect is a very small aspect, okay? So if I talk about this entire Ind AS 12, 5% of the standard covers current tax and 95% of the standard talks about deferred tax, okay? So 5% of the standard talks about current tax and 95% of the standard talks about deferred tax. Deferred tax. Friends, I would like to know from each one of you, have you heard the concept of deferred tax? Do you know deferred tax?
Yes, sir,
Yes.
Yes,
from accounting standard 12.
yes,
So you heard about the concept of deferred tax. The concept of deferred tax was there in accounting standard 22 also, right? In your CA inter days, in your childhood days, in your articleship, in your audit time, you must have seen the implication of deferred tax on timing difference, right? So now in India, the concept is temporary difference, but you have seen that, okay? And what is current tax? The tax which is payable on the taxable income, right? The tax which is calculated on the taxable income is your current tax, correct? Right? So friends, these are the two aspects we are going to cover in this standard. And this Ind AS 12 or accounting standard 22, what was the objective of these standard? The objective is to provide the matching principle between accounting provisions and income tax provisions, right? So this standard came with a concept of providing a matching principle between the accounting profit and tax profit. So how it will be there, we'll discuss and we'll discuss and we'll let you know, okay? So friends, talking about Ind AS 12, in this Ind AS 12, we are going to cover the objective of this standard. This standard is prescribe how to account for the current and future tax consequences. Current means current tax. Means your tax on the current year profit. And what is meant by future tax? Future tax means deferred tax. Okay. So consequences of the future recovery or settlement of the carrying amount of assets or liabilities that are recognized in an entity's balance sheet, and transaction and other events of the current period that are recognized in an entity's financial statement. Just a gyan, English, leave that. Okay. So friends, we are going to cover about largely two concepts in this standard. We are going to cover about the current tax and deferred tax. The title is income tax. The title is tax expense. So tax expense is the summation of tax expense is the aggregate of current tax and aggregate of deferred tax, right? So what is current tax? Current tax is amount of income tax payable or recoverable in respect of the taxable profit or tax loss for a period. Amount of income tax payable or recoverable in respect of the taxable profit or tax loss for a period. Income taxes payable or recoverable in future period in respect of temporary differences and carry forward of unused tax losses or credits. What is this? This is deferred tax. Means current tax pertains to the taxable profit or loss for the current period, for the financial year. Okay. And deferred tax refers to income taxes payable or recoverable in future period. Okay. Is this clear? As the name suggests, current tax is for the current year taxable profit. Deferred tax is for the taxes which is relating to the future years, either recoverable or payable. Is that clear? Is that clear, my dear friends?
Clear.
Okay. Okay. Right. So 2-3 things I want to clarify here, and let me write down those 2-3 things. So coverage. From the coverage perspective, we are going to cover coverage. From the coverage perspective, we are going to cover current tax and we are going to cover deferred tax. And we are going to cover deferred tax, right? These are the two critical concepts in this standard. Friends, we are going to cover, as far as agenda is concerned, we are going to cover 4 pillars of income taxes. 4 pillars of accounting standard on income taxes. What are the 4 pillars?
RMPD.
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 When I heard about this word, so that word assure me that you guys are my student. RMPD. So we are going to cover about the recognition of current tax and deferred tax, right? Recognition of current tax and deferred tax, right? Recognition. Measurement. Okay, measurement. Then presentation. Then disclosure, right? So we are going to cover these aspects of current tax and deferred tax. What aspects of current tax and deferred tax? Recognition, measurement, presentation, and disclosure, right? Recognition, measurement, presentation, and disclosure. Then we are going to cover some specific items. Okay? Specific items. That on those specific items, how this deferred tax will be addressed. For example, in case of business combination, in case of acquisition, amalgamation, merger, how this deferred tax calculation has to happen, right? And the last one is, of course, disclosure. So friend, this is the agenda. Okay. In income taxes, we are going to cover about the 2 aspects, current tax and deferred tax. Okay. So income taxes is equal to what? Income taxes is equal to current tax plus deferred tax, right? So these 2 things we are going to cover, current tax, deferred tax, and we are going to cover recognition, measurement, presentation, disclosure, and some specific items or specific situations, right? Okay. Shall I move forward? Okay.
Yes.
What is current tax? We discussed current tax means tax payable or recoverable for the current period. Tax payable or recoverable for the current period. Why this standard has come into picture? Let me explain you guys why this standard has come into picture and what this standard talks about. First of all, I'll give you the helicopter view of this standard and then I'll move to the specific items one by one. Okay. Right. So friends, let me give you an example and from that example, I will explain this part. Example. Let's say, so I am giving you a profit and loss account. Okay. A statement of profit and loss. And how will you prepare your profit and loss? As per Income Tax Act or as per Companies Act?
Company Act.
As per Companies Act, of course, as per Companies Act. This is my revenue. This is my expenses. And in my expenses, there is a expense on account of provision for gratuity, right? And other expenses, okay? Other expenses. So there is a provision for gratuity, employee benefit expense, and other expense. Purposely, I have separately shown provision for gratuity, okay? The revenue is 10,000 rupees. Provision for gratuity, so let me take it 1 lakh rupee, okay? Provision for gratuity is 10,000 rupees. Employee benefit expenses is 20,000 rupees. Other expenses is, let's say, 30,000 rupees. So what is my profit? My profit before taxes, PBT is how much?
40,000.
How much is my PBT?
40,000.
So total expense, let me write this as a total expense. Total expense. And my profit before tax is this minus this. 40,000 is my profit before tax, right? Now, let me give you some assumptions, okay? Assumption number A. Tax rate is 30%. Tax rate is 30%. B. Gratuity is allowed in the year the payment is made. Right? Provision भी income tax का यही है. Gratuity in income tax is allowed in the year the payment is made. So whether provision for gratuity is allowed under income tax on the accrual basis?
No, sir.
No, it is allowed on the payment basis generally. Okay. Yes. So these two things are given and year, let's say year 1. Okay. Year 1. Friends, let me give you year 2 also. Year 2. Same numbers are there in year 2 also. Same numbers are there in year 2. Right? There is a year 3 also. There is a year 3 also. Same numbers are there in year 3, but some other information is given. Gratuity in income tax is allowed in the year the payment is made, and the provision on gratuity for year 1. So basically, the payment of gratuity to few employees have been paid in year 3 for rupees 20,000. Right? So the payment of gratuity to few employees have been paid in year 3 for rupees 20,000. Okay. So friends, this is your profit and loss account. This is your PBT, right? Now tell me, what should be your tax expense? Tax rate is 30%. What should be your tax expense? I'm talking about P&L. I'm not talking about income tax. I'm talking about P&L. I'm not talking about income tax return. I am telling you, I am asking you, as per accrual principle, if 40,000 is your profit before tax, what should be your tax expense if 30% is the tax rate? What should be your
12,000.
ETR?
12,000.
12,000? It has to
Yes.
be 12,000, right? It has to be 12,000. 40,000 multiplied by 30%. Why you guys are hesitating? It has to be 30%, na? 12,000, 12,000, 12,000.
Yes, sir.
Right? 12,000. But friends, this is my company's books. This is as per the Companies Act. As per Income Tax Act, if I need to compute my taxable profit, so this is my company's accounts. This is company's books as per index. Okay, right? But are you paying your tax as per company's books or as per Income Tax Act?
As per
Income
income
tax.
tax, sir.
Income Tax Act. So let me prepare my P&L as per Income Tax Act, right? ठीक है ना?
Yes, sir.
Yes.
Taxable profit under Income Tax Act. You guys need to teach me Income Tax Act. I don't know Income Tax Act. Right? पढ़ाओगे नहीं पढ़ाओगे मुझे? Particulars. Okay. So let me write particulars here also. Let me write here particulars. Year 1, 2, 3. Revenue. Is there any change in revenue? In year 1, 2, 3?
Oh, no, sir.
No change.
No change.
Revenue, the same revenue will be taxable, whatever is in your company's books. अगर कुछ नहीं लिखा, we are assuming, right? Don't engineer and don't re-engineer. Okay? If nothing is given in the question, assume yes, it is my taxable revenue also, right? Provision for gratuity 10,000. Is it allowed in Income Tax Act, provision for gratuity? So let's talk about the first year only. Is it
Not
is it
allowed, sir.
not allowed? So shall I make it 0? Shall I make
Yes,
it
sir.
0 in Income
Yes.
Tax Act? Naman, shall I make it 0 in Income Tax Act? I am computing the profit as per Income Tax Act. So
Yes,
provision for gratuity, should I make it 0? Okay, right? In the first year. I'm not talking about second, third year. Employee benefit expense means salary and other expenses. So shall I keep it as a same number? Salaries and other expenses, right? Okay, है ना? या नहीं?
Yes.
What is my total expense? 50,000. What is my profit before tax? My taxable profit. Should I write this as a taxable profit? Right, yeah. So what is my taxable profit, friends? 50,000 is my
50,000.
taxable profit. But what was my accounting profit in the year 1?
40,000.
40,000 is my
Profit, 40,000.
accounting profit in year 1. And what is my taxable profit? 50,000. So my taxable profit is more than my accounting profit. Now tell me, if I need to pay advance tax, self-assessment tax, if I have to file income tax return and pay the taxes, so my current tax, what is my tax expense? What is my current tax? Tax expense at the rate 30%, right?
Yes, sir.
You have to pay tax on your taxable income now. Multiply by 30%.
15,000.
15,000. 15,000 is my tax expense. But going by the accrual principle, your tax expense is 40,000 because, sorry, 12,000. Because your accounting profit is 40,000 and 30% should be 12,000. And here your current tax is coming at 15,000. The tax which is going to be payable is 15,000. So friends, tell me first of all, why there is a difference of 3,000 between the accounting tax and the income tax tax?
This is due to provision for gratuity disallowed in income
This
tax.
is due to provision for gratuity disallowance. Due to the provision for gratuity disallowance, we are paying higher taxes. Am I right?
Yes.
So tell
Yes.
me, if we are paying higher taxes today, will we get any benefit, Saminathan, in future? अगर आज मैंने हायर टैक्स पे किया है तो क्या मुझे फ्यूचर में कोई बेनिफिट मिलेगा इसका? इन
Yes,
फ्यूचर,
sir. Yes, sir. Benefit is available on future. On third year is available.
okay, so let's see the third year. So let's talk about the second year also. In second year, what should be my provision for gratuity in Income Tax Act? 0.
0.
Okay, employee benefit, other expense, same number, right? What
Yes,
is my
sir.
taxable profit in the second year?
Same amount, 50,000.
50,000. What is my tax expense? What is the tax I'm going to pay in the second year? 15,000. Same
Yes, sir.
amount. But what is my tax expense as per accounting profit? 12,000. So let's come to the third year. Third year. Provision for gratuity. Instead of provision for gratuity, shall I write this as a payment of? So let me keep one more line item. Payment for gratuity, right? Shall I keep this line item, payment for gratuity? There are no payments, okay? But in the third year, what is my payment of gratuity?
20,000.
20,000 is my payment of gratuity. So this is allowed expense now, right? This will become the allowed expense now. Yes or no? Yes. Rest of the expense, 20,000, 30,000, I'll keep as it is. What is my total expense? 70,000 is my total expense. Okay. What is my third year taxable profit? 30,000 is my third year taxable profit. 30,000 is my third year taxable profit. Okay. Right. So what is my tax expense? 9,000.
9,000.
9,000 is my tax expense. This is right now. So guys, I have prepared taxable P&L. So might be you guys will get confused because you have a habit of doing the work in one fashion where you are taking accounting profit, you are adding back provision for gratuity. You remember those calculation?
Yes. Adding
Yes,
back.
sir. We'll add, reduce all these things we do.
Right? So adding,
Add less and
reducing.
less.
So, but what is this? This is income tax P&L. In income tax P&L, I started with revenue. I haven't started with profit. So in income tax P&L, income tax says, no, I don't know provision for gratuity expense. I don't know. This is not an expense for me. Means this is disallowed. If I would have started with my accounting profit, then I would have add back this provision for gratuity. But what I did here, I have not considered provision for gratuity. Why? Because I am preparing income tax P&L, and income tax says that provision for gratuity is not an expense for me. Right? Income tax says provision for gratuity is not an expense for me. But yes, if you pay gratuity, it is an expense for me. It is an allowed expense for me. So that is why if you see, I have added one more item, payment for gratuity, right? And I have considered this as an expense in the income tax P&L. And that is why my expense in my third year profit, my expense was 60,000. But in my third year income tax P&L, my expense become 70,000. So for more clarity, let me let me make this 0. My provision for gratuity in my accounting P&L, I am making the provision for gratuity as 0. Okay. Are you guys okay with that?
Yes, sir.
Are you guys okay with that?
Yeah.
Just to simplify it and to show you the impact. Okay. So friends, if you see here, in first year, my accounting profit was 40,000. My tax expense, effective tax rate, 30%. My tax expense is 12,000. But in income tax, I'm paying 15,000. In the second year, my tax expense would have been 12,000. In income tax, I'm paying again 15,000. In third year, my tax expense would have been 15,000 in my books of accounts, but I am only paying 9,000 rupees. So why I am paying only 9,000 rupees? However, my
Because I have
accounting,
paid earlier the tax.
because I have paid higher taxes earlier. Because I have paid higher taxes earlier, right? So friends, what is the nature of this tax expense in your accounting P&L, and what is the nature of this tax expense in your income tax act? In your accounting P&L, this tax expense consists of two portions. What are these two portions? This is current tax and what?
Deferred tax.
Deferred tax.
And deferred tax. You guys are not quickly responding. You guys forget me, right? You guys forget that I have covered your so many standards. आप लोग भूल गए हो.
We are daily remembering you.
Yes,
Upon
sir.
previous
We are daily.
So we
Okay.
I'm happy to see you back.
Yeah. And this tax expense, what is the nature of this tax expense? This is my current tax. In income tax says that I don't know the concept of deferred tax. This deferred tax is created by accounting standard. In income tax act, there is no word of deferred tax. Okay. So this deferred tax concept has arisen to match your accounting tax, to match your accounting profit and your taxable profit, to match your accounting expense and your tax expense. Okay. So friends, current tax I'll take from where? Current tax I'll take from income tax calculation, computation. Current tax I'll take from computation. Okay. So my current tax is 15,000 in the current year. What should be my deferred tax? My expense should be 12,000.
Minus 3,000.
Yeah,
Minus
3,000.
3,000 means, if you will see here, I am paying, my accounting profit is 40,000, and since my 10,000 provision for gratuity is disallowed, so what is the tax impact on 10,000? 10,000 multiplied by 30%, 3,000, right? So is it a temporary difference? Is it a timing issue, or is it a permanent difference?
It's a timing difference.
It's a timing difference. It's a temporary difference, right? So today it is disallowed, but tomorrow it will be allowed. In year 3, when I will pay gratuity, it will be allowed. But will you see the expense in your accounting books? Will you see the expense when you will pay? Answer is no, because you will pay through liability. In first year, you have created an accounting on accrual basis, provision for gratuity expense account debit to provision for gratuity liability. In the second year accounting entry, provision for gratuity expense account debit to provision for gratuity liability. In third year, you are not required to route through P&L. What you will do when you will make a payment? Provision for gratuity liability account debit to bank account. Okay. So in your accounting books, this expense will not come, but in your tax, this expense will be allowed in year 3. So it's only a timing issue. Means whatever I am paying extra today, I will get a recovery of this tax in future. Yes or no?
Yes.
So in this case, what is my accounting entry in the year 1? what is my accounting entry in the year 1, my dear friends? In year 1, my accounting entry will be provision for current tax expense account debit to provision for current tax liability account, right? Provision for tax liability. What is the amount in year 1? What is the amount in year 1?
3,000.
And let me write this here. Year 1, the amount is 3,000. Amount is 3,000. Amount is 15,000. In the year 1, you are paying 15,000 of tax, right?
Yes, 15,000.
15,000. Then what is the next entry? The next entry you are paying 3,000 extra. What is the next entry? Your next entry will be deferred tax asset account debit. There is one asset which is going to be created. Because why? Because you will get a benefit in future. This asset will give you future economic benefit. To deferred tax expense. To deferred tax expense. Means negative expense. Negative expense means income. Right? Negative expense means income. 3,000 rupees. And how this 3,000 will come? How this 3,000 will come? The difference between
15,000 minus 12,000.
Yes, 12,000 and 15,000. So this is minus 3,000. This is minus 3,000. Minus 3,000. Right? Minus 3,000. Anyone who has any doubt on this 3,000? Any doubt? Bibhu, do you have any doubt on this 3,000?
No, sir.
No? No doubt? Okay. So now your accounting profit is matching. Yes? So current tax is also matching. Accounting profit is also matching, right? So now your profit after tax will be how much? Profit after tax is 40 minus 12. What about second year? What about second year? Same? Second year same?
Same. Yes, same.
Right? So again, minus 3,000 will be your deferred tax. Deferred tax income means reversal of, means negative deferred tax expense, right? And this is my profit after tax. What about third year? Your current tax is 9,000 only. What is your third year? So year 2 same number. Year 2 same number. 15,000, 3,000. What about year 3? What happens in year 3?
Plus 3,000. Plus 3,000.
Year 3. In year 3, what will happen in year 3? In year 3, technically speaking, your 50,000 is accounting year profit, accounting profit. 30% is the tax rate. 15,000 should be tax expense, but it is only 9,000. So what will happen in year 3? In year 3, your current tax expense is how much? 9,000. Your current tax expense is 9,000. What about your deferred tax expense? Your deferred tax will be reversed now. Why? Because 50,000 is your accounting year profit. As per accounting profit, how much should be your tax expense? 50,000 multiplied by 30%. Right? It has to be 15,000, but it is only 9,000. Why? Because the higher taxes which you have paid in the first year and second year on account of disallowance of provision for gratuity of 20,000 rupees in 2 years, now it is getting allowed. So what is the accounting entry? Accounting entry is now this deferred tax asset will be credited and deferred tax expense should be debited. Okay. So minus 6,000. Why I am putting minus 6,000? Or let me, for more clarity, let me write this accounting entry. Now it is deferred tax expense debit to deferred tax expense account debit to deferred tax asset, right? To deferred tax asset. Now I'll credit my deferred tax asset to deferred tax asset. Okay. And what is the amount? This plus this. The income which you have created, now you'll reverse that income, right? So in this case, what is my deferred tax expense? It is 6,000. And what is the total? Are you happy with this number? Now your
Yes.
numbers are matching?
Yes, sir.
Or no?
So let's
So
assume that we have more tax in year 3. Then will we create DTL?
you have,
If
sorry,
it's
I haven't understood. You have more, you have more tax.
then we have created DTA.
No, so can you
That
please clarify? I haven't understood your question, Bibu.
sir, for example, in year 3 where we have a tax expense of only 15,000 and 9,000, the difference is say deferred is 6,000. In the
Yes.
case where the tax expense is more and tax expense is less, where
Okay.
total expense is less and profit after tax is more
In accounting or in tax?
in accounting, sir.
In accounting, my profit before tax is more, right?
Yes, sir.
This is what you are saying. So here you
Yes,
can
sir.
see now, here my profit, even if you see, my profit before tax is 50,000 in third year. Whereas in year 1 and year 2, my profit before tax was 40,000 only. So I have taken more profit in year 3. So accordingly, so what will happen? First of all, you will calculate a normal current tax. You will calculate normal taxable profit. Okay. So we have computed normal taxable profit. Okay. When we computed normal taxable profit, we got a tax expense of 9,000 rupees. Why? Because while computing the taxable profit, we have allowed provision for gratuity also. Okay. So this become 9,000, right? So, and then whatever we have allowed, which we have disallowed in future, disallowed in past, now we have allowed. So accordingly, your provision for deferred tax, whatever you have created, that is also going to be reversed now. So otherwise तो mathematics है, otherwise तो number क्या है, mathematics है. जैसे for example, let's make this other expense as 10,000. Okay, कि next year में क्या हुआ, third year में other expense 10,000 हो गए, right? Then what will happen? तो क्या होगा? अगर ये 10,000 हो गए तो थर्ड ईयर का टैक्स क्या होगा? लेट्स से this other expense instead of 30,000 it become 10,000. Okay, Bibu, right? So now your tax expense become 15,000 in third year. So your current tax become 15,000, right? Your deferred tax 6,000 ही रहेगा and your total tax expense in the P&L has become 21,000. इसकी ETR चेक कर लें, इसका ETR 21,000 divided by 70,000. It has come to how much percent? Sanjay, 30%. Right, Bibu? So your current tax will keep on changing, na? Your current tax. Your deferred tax will remain same, na? Bibu, ये क्लियर है? जैसे मैंने अभी क्या किया, मैंने थर्ड ईयर का प्रॉफिट बढ़ा दिया. सॉरी,
Clear, sir.
clear? Or let's say Bibu, instead of, so earlier I have make it 30,000, right? Let's say instead of making 30,000, let's make it 50,000. मैंने खर्चा 50,000 कर दिया. Okay. So if my other expense is 50,000, what is my taxable profit? 50,000. My taxable profit is 3,000 only, right? So my current tax is 3,000. My deferred tax expense is 6,000. My total tax expense is 9,000. And let's check the ETR, effective tax rate. So it is coming at 30% only. 9,000 divided by 30,000. Mathematics. So what I'm trying to explain here, in taxable profit, in income tax, the taxable profit is computed as per income tax provisions. In accounting, you compute your tax expense as per accrual concept, right? As per accrual concept. Between the tax and between the accrual concept, there are some timing differences. In income, in Ind AS, we call these timing differences as a temporary differences. नाम बदल गया, काम वही है, राइट? हम इनको क्या बोलते हैं? टेम्पररी. टेम्पररी का मतलब क्या होता है?
संक्षेप.
टेम्पररी का मतलब क्या होता है? which will change, which can change, right? Okay, so friends, how this income tax provisions and this accounting provision is matched. How this is mitigated? This is mitigated through the concept of deferred tax, right? So deferred tax is a accounting concept, and income tax is a current tax is a income tax concept, right? So हमने क्या किया यहाँ पे? Current tax we have computed at income tax provisions, right? So your current tax provision will come from the income tax computation. It will come from the income tax return, and your deferred tax, it will come from your where? It will come from the temporary differences. Okay. Is that clear or still not clear, guys?
Clear.
I have just set the context so that you will be able to compare that whether your profit, whether your tax and your profit, whether these numbers are matching or not matching. This is the only intent. Okay. I hope it is very much clear to everyone. Still, if there is any doubt, I would be happy to, clarify this. If there is still any doubt.
Sir, you have provided one technique, no, on keeping the hand on the both hand on the head.
I'll cover that. Abhi nahi, abhi to spare time.
I remember still. No.
Yes, I'll cover that. But friends, and what is the checks and balances to ensure that your computation, your calculation in books of accounts are right? So you can see the ETR, effective tax rate. ETR 12,000 divided by 40,000, 30%. 30%. In second year, 12,000 divided by 40,000, 30%. In third year, 30%. Okay, right? 30%. Right? Clear? So this ETR will always be in your P&L, your total tax expense divided by profit before tax will come as a tax rate if permanent difference is not there. If permanent difference is there, then of course your ETR will not match. Okay, I'll come to that. Right? Is that completely clear? Very good. Very good. Right. So friends, current tax, simple. So in current tax, you have to debit your current tax expense in the P&L and you need to credit your current tax liability. Okay. And whatever advanced tax TDS you have paid, what you will do? क्या करोगे? Advanced tax and TDS, asset account debit, right? So that is an asset na. To what? To whatever you have credited. So let's say if you have received from your customer, so you will credit those accounts, but your advanced tax and TDS is an asset, right? And your provision for current tax is a liability. Okay. And at the end of the year, will you offset your advanced tax and TDS in your provision for current tax liability, or you will show separately?
We will adjust it, sir.
We will adjust, because let's say your full year tax liability is 10,000 rupees and your TDS is deducted for 6,000 rupees. Will you pay 4,000 rupees? Will you deposit self-assessment tax of 4,000 rupees or entire 10,000 rupees?
Yeah, 4,000.
Only 4,000.
4,000 rupees, 4,000 rupees, right? 4,000 rupees. Okay. So it means, what does it mean? It means this advanced tax and TDS has to be adjusted into your current tax liability. Means it is a tax you have already paid, which you have not paid. Your customers has deducted and deposited, right? So your year-wise advanced tax and TDS and tax liability has to be netted off year-wise. If my advanced tax and TDS has been deducted for the previous year, but my tax liability pertains to current year, then what will happen? Whether the previous year TDS will be adjusted from the next year tax liability?
No.
Answer is no. So your netting off has to be year wise. Your netting off has to be year wise. Okay. Right? Clear? Not
Clear.
clear?
Clear.
Very much
Absolutely
clear?
clear. Very much clear.
Okay. So friends, current tax concepts. So number one, current tax has to be computed as per income tax provisions. Okay. As per income tax provisions. Okay. Right. So as per income tax provision means whatever your question will tell you. Okay. Not like if question is telling you X, if question is saying that provision for gratuity is allowed at the rate of 50% every year under Income Tax Act. So please do 50%. Don't apply your income tax mind. No. We have read that provision for gratuity disallowed. No. You have to go by the question. Okay. Because it's a financial reporting paper. It's not an income tax paper. While it may not be there in this way, but I am telling you, if question will say this, please apply this. That is clear? Okay. So current tax has to be computed as per income tax provisions. Okay. Number two, your what is your accounting entry? Accounting entry of current tax will be what? Provision for current tax expense account debit, or simple you can write current tax expense also. 2, provision for current tax liability. Right. Okay. Just a minute. So payment of advance tax and self-assessment tax. Payment of advance tax entry. What is the payment of advance tax entry? Advance tax has to be paid during the year, right? During the previous year, during the financial year. So what is your advance tax entry? Advance tax asset account debit to bank account. Okay. Debit, credit. In balance sheet, advance tax and TDS needs to be netted off from provision netted off from provision of current tax liability. The netting has to be year wise. Okay. ऐसा नहीं कि last year advance tax and TDS has to be offsetted from the current year tax. Okay. Any other clarity which you want on the current tax? Any other clarity? Yeah. Any other clarity?
No, sir. Clear, sir.
So current tax concept is completely your income tax, right? Now coming to the deferred tax concept. Okay. Deferred tax concept. Friends, so I would suggest you, so let me open your Index 12 BOS material. I hope the BOS material is visible to all of you.
Yes, visible.
Yes.
Yes.
Yes. So illustration number 1A they have given. So they have given a balance sheet and they want to calculate taxable profit for the financial year 7-8 and the related current tax expenses. Okay. They have given this entire balance sheet and you can see they have given the P&L also. So they have given the balance sheet and then they have given the P&L where they have given revenue, cost of sales, gross profit, operating cost, profit from operation, finance cost, and profit before tax they have given. And they have given some sort of information for the depreciation, for some product development cost, for some other items as well. Okay. And they want to compute the taxable profit. And you can see one important line in this note. This illustration is prepared for the purpose of understanding the computation of current tax and is in no way based on the provision for Income Tax Act 1961. For the purpose of financial reporting, the tax treatment will be given in the question. Okay. So then whatever is given in the question, they have started with the accounting profit like you guys are doing, your profit as per the P&L, and then you have done some disallowance like accounting depreciation you will add and the tax depreciation you will deduct, right? So these things has been done and your current income tax rate is 30%. So your current income tax is computed at 28,14,000. And what is the accounting entry? Current income tax expense account debit to current income tax liabilities, current tax expense account debit, or provision for current tax expense account debit to provision for current tax liabilities. Okay. So if you see this question, the intent of the question is to show you the journal entry. And for that, the question is such a bigger question and the question is showing you the computation. So to cut a long story short, you need to prepare your computation of income. You need to compute your taxable income. You need to compute your income tax expense, means your tax liability. And with the tax liability, your accounting entry will be current tax expense account debit to current tax liability account, right? Okay. Do you want me to solve this question, computation of income? This is not an accounting thing. Or will you do this in your homework?
Yeah, we'll do the homework, sir. I
Yeah.
think the
So
concept clearly explained.
yeah. So I think it is just there is no need to consume this time. So it is just a computation of income. It's an income tax question, but the bottom line is from the income tax question, from the computation of income, we picked the tax and we passed the entry. We took the impact in the P&L in the current tax. Okay. So deferred tax is separate. Deferred tax is separate. Okay. Clear? So friends, now we'll move to the deferred tax. We understood, as the word deferred tax suggests, we understood deferred tax means, what is meant by deferred tax? Like current tax is the tax payable or recoverable for the current period, for the current year. What is deferred tax? Deferred tax is tax payable or recoverable in which period?
Future period.
In future period. Tax payable or recoverable in future periods, right, is meant by deferred tax. What is deferred tax? Deferred tax is tax payable or recoverable in future periods. Okay. Sir, if today I have paid higher taxes, like we have seen in the provision for gratuity, in year 1, year 2, we have disallowed and we paid higher taxes. So technically speaking, since we have paid higher taxes in year 1 and year 2, when the company has actually paid the gratuity, the company got the benefit. And in third year, whatever 6,000 has been paid higher in year 1 plus year 2, this 6,000 benefit the company has got in year 3, right? कंपनी को बेनिफिट मिल गया ईयर 3 में,
Yes.
है ना? So company got the benefit in year 3. So the point is, sir, the company has paid a higher tax in year 1 for 15,000 rupees. Ideally, the tax would have been only 12,000 rupees, but tax has been paid by 3,000 rupees extra. The benefit of this 3,000 is getting in the benefit of this 3,000, the company will get in the year 3 after 2 years. So whether this deferred tax of 3,000 is going to be discounted, whether the present value accounting has to be done, क्या करना है? Deferred
No.
tax liability, deferred tax asset, क्या इसकी discounting accounting होगी?
No. No.
Yes or no?
No.
It is not your financial liability. It is not your financial asset. So friends, deferred tax asset and deferred tax liability shall never be discounted. Right? Always remember, note, deferred tax asset and liability shall
It's
not be
notional asset, notional liability.
shall not be discounted. Okay. And friends, so let me tell you something. So when I took the interview of fresher chartered accountants, I always used to trap them, right? I set the context and I emphasize that just tell me the company has created a deferred tax asset, and this deferred tax asset is going to be recovered after 5 years. The discount rate is 10%, the deferred tax amount is 1 lakh. So tell me whether this 1 lakh has to be recognized in the current year or it has to be discounted. So 80% of the fresher chartered accountant when come for interview, they say that yes, it is going to be discounted. Because I asked the question in that way, they got confused. So the point is, don't get confused. Deferred tax asset and liability shall never be discounted. Let me write like that. Let me write like this. Shall never be discounted. Okay. Will you be able to remember this?
Yes, sir.
The
Yes.
second question which I used to ask to confuse them, and 80 to 90% they got confused and give me wrong answer.
Will DTA and DTL exist in the same time?
No, so just hold on. So the second question I used to ask, like I told you, this deferred tax asset is going to be recovered after 5 years. So what is the nature of this deferred tax asset? Current asset or non-current asset? So they give the right answer, sir, it is a non-current asset. Then I used to ask them, okay, so tell me one thing. For example, the company has created a deferred tax asset or deferred tax liability, whatever. Let's say deferred tax asset. On the reporting date, okay, reporting date is 31st March. The balance sheet is going to be finalized for unlisted entity. What is the timeline for filing the balance sheet for unlisted entity? 30th September.
30th September, yes.
30th September. So till the 30th September, since the second half year has also completed, right? अगले साल के भी 6 महीने खत्म हो गए ना?
Yes,
So
sir.
Yes.
I used to ask them, see, you are finalizing your balance sheet on 30th of September pertaining to 31st of March. You created a deferred tax asset. And since already 6 months has gone for this year also, now you have complete clarity that this deferred tax asset is going to be recovered in this year only, right? So tell me whether it has to be current asset or it has to be non-current asset. So 80 to 90% fresher chartered accountant used to tell me it is a current asset. Friends, para 56 of Ind AS 1, para number 56 of Ind AS 1 says that DTA and DTL shall always be non-current asset. Will you be able to remember this?
Yes, sir.
Sir.
Yes.
We are
My
towards
dear friends, in objective type question, in multiple choice question, these two kind of question may come if it pertains to industrial. Okay, so always remember deferred tax and liability shall never be discounted. Deferred tax asset and liability shall always be which asset? Current asset or non-current asset?
Non-current assets.
Non-current asset and non-current liability. Non-current asset and liability. Okay. If DTL है तो क्या होगा? Liability होगी ना? Okay. Friends, that is the reason. That is the reason you will find that in your schedule 3. Have you seen schedule 3? MCA का schedule 3 division 2 आपने देखा है नहीं देखा है?
Yes.
Yes. So in your schedule 3, you will find your DTA and DTL in the non-current only. You will not find DTA and DTL in the current side. You will find only on the non-current side. Right? याद रहेगा या नहीं रहेगा? रहेगा?
Yes.
Okay. Now, steps on deferred tax. Steps for computing deferred tax. Steps for computing deferred tax. What are the steps for computing deferred tax? कौन से steps हैं deferred tax को compute करने के लिए? Are you guys aware about the deferred tax concept? Step number 1, friends. Third, note. Note. Deferred tax has to be computed on the balance sheet approach. Have you heard about the word balance sheet approach? Have you heard about the word balance sheet approach?
No.
So balance sheet approach. In CA Inter, we were computing deferred tax using P&L approach, right? So
Yes, sir.
when you were kids in CA Inter, the approach was P&L approach, but now the approach is balance sheet approach. Okay. So deferred tax has to be computed using balance sheet approach. Okay. Note, deferred tax has to be computed on the temporary differences, right? On the temporary differences. So the word is temporary difference in Ind AS, not timing difference. Do you find these notes useful?
Yes, sir.
Sir, this is very, very useful. I was revisioning your the PPE and all these things. Using only that Excel file only. It was very useful.
So points to remember. Believe me, if you will come for an interview in my organization after becoming a chartered accountant, believe me, your interview will get cracked. You will be able to clear the interview. Okay. Because I always used to ask a fundamental question from the chartered accountant to check how much depth is there, whether they have understood the concepts or whether they have mug up the concept only for the purpose of clearing the exam. Okay. So friends, these are the 4-5 things which I want to explain you guys, which I wanted to tell you guys, that these points you should remember always, right? Before coming to the steps for computing deferred tax, so let me tell you about the balance sheet approach and P&L approach. Okay, what is your balance sheet approach and what is the P&L approach? Let me explain that. Example. A Limited has purchased a machinery for rupees 1 lakh on 1st April 2023. Okay. the useful life of the machinery is 10 years, right? The useful life of the machinery is 10 years. In income tax, depreciation on machinery. What is the depreciation on machinery in income tax? The depreciation on machinery is provided at what is the rate?
15%.
15%. Very good. The 15% is the rate. The depreciation machinery is provided at 15%. Okay. So please provide the deferred tax, income tax and deferred tax. Please provide income tax. Please provide current tax and deferred tax calculations. Okay. For financial year 23-24, assuming the profit before depreciation is 50,000 rupees. Is 50,000 rupees. The question is clear or clear?
Clear, sir.
Clear, sir.
Clear? The question is clear? Very much clear question? Yes? Okay. Now, let me give you the account. Let's compute the accounting profit first. Accounting profit. And your taxable profit before depreciation. What is my profit before depreciation? 50,000. Okay.
50,000.
Yes.
50,000 is my profit before depreciation. Okay. And what is my depreciation expense in accounting? What is my depreciation expense?
1 lakh divided by 10,000.
So 1 lakh is the cost of machinery, 10 years is the life of the machinery, 10,000 is the depreciation, right?
Yes,
so
sir.
it is 1 lakh divided by 10,000. What is my profit before tax? What is my profit before tax? Okay. My profit before tax is how much?
40,000.
My profit before tax is 40,000. 40,000. Okay. What about your tax? What about your taxable profit? Your profit before depreciation. How much is your profit before depreciation?
Same 50,000.
Same 50,000. And what is your depreciation expense in tax? What is your depreciation expense in tax? 15%, ना 1 lakh का 15%.
Yes, sir.
WDV concept होता है ना 1 lakh का 15%, 15,000. And what is your
7,500.
profit? What is your taxable profit? Taxable
7,500.
profit is 35,000. Or alternatively, which you guys are used to, alternatively, जो आप लोगों को आदत पड़ी हुई है करने की, profit as per books. What is my profit as per books? What is my profit as per books?
50,000.
Profit as per books तो 40,000 होगा ना. Profit
Yes,
वो तो
40,000.
बिफोर डेप्रिसिएशन था 50,000 तो, बट बिफोर टैक्स तो आपका 40,000 ना प्रॉफिट एज पर बुक्स. एड व्हाट एड? Depreciation as per Companies Act or as per books. Right?
Yes, sir. We do like that only.
Depreciation as per books, you will add back. What you will deduct? Less.
Per income.
Depreciation as per
Depreciation as
Income
per
Tax
income
IT
tax.
Act. Income Tax Act. What is your depreciation as per Income Tax Act? 15,000.
15,000.
This is your taxable income. आप ऐसे ही करते हो ना?
Yes, sir.
Yes.
Is it matching or not matching?
Yes,
Yes, it will match.
Yeah. Okay. So friends, in this question, assuming your tax rate is 30%. Is 30%. So friends, in this question, if you see, there is a difference of 5,000 rupees in your depreciation expense. Yes or no?
Yes.
In Companies Act, means in your accounting books, your depreciation is 10,000, but you are getting a higher allowance. You are getting a higher expense in Income Tax Act, right? By 5,000 rupees. So you are allowed to claim 10,000 rupees in your P&L, in your P&L, in your accounting books, but you are allowed to claim 15,000 rupees in your tax books. Means you are getting a higher claim. Okay. But tell me, what is the total depreciation over the life in income tax and in the accounting books?
It
One
will be not more than its value. That is 1 lakh.
So what is the total depreciation over the life in accounting books?
Over the life, it will be up to the
1 lakh.
price of the machinery, not more than that 1 lakh.
1 lakh. So in one word, 1 lakh. In accounting books, the total depreciation over the life is 1 lakh. In income tax books, the total depreciation over the life is 1 lakh. That's all, right? But year over year, the amount is different. Okay. So what is my current tax and what is my deferred tax in this case? So taxable income is 35,000. What is my tax? What is my tax at the rate of 30%? How much tax I need to pay?
10,500.
10,500.
10,500. So what is my current tax if I talk about my tax expense? What is my current tax? 10,500. My tax expense is 10,500. My current tax expense is 10,500. Current tax. What is my deferred tax? My deferred tax. In this case, if you see, what we used to do, we compare the depreciation. My depreciation in income tax is higher by 5,000. Means in my accounting, I am only claiming 10,000, but in my income tax, I am claiming 15,000. I am claiming more depreciation and I am paying less tax, right? Since I am claiming more depreciation in the initial years, so my taxable profit is lower than my accounting profit, right?
Yes.
ये मुझे yes में ना बहुत दम नहीं लग रहा. मुझे yes
Yes,
में
sir.
I am not seeing a confidence.
Yeah.
Yes, sir. Very much, sir.
Yeah. So
Clear,
everyone
sir.
is clear now. If I am claiming higher expenses in income tax, so my taxable income become lower than my accounting income. Okay. And it is visible also. So my accounting profit is 40,000, but my tax profit is 35,000. It means I am paying less tax today. If I am paying less tax today, what will happen in future? I have to pay
I have to pay more tax.
More tax.
And we have
pay
to
more
get
tax.
liability.
Yes, I have to pay more tax. I have to pay more tax because in future a time will come, because the maximum amount to be claimed as a depreciation is 1 lakh only, right? Is 1 lakh only. So if I am claiming a higher depreciation in the initial years in income tax, in the later years, the depreciation will be lower than the accounting depreciation. Total to 1 lakh rupees ही है, right? So
Yes, sir.
at that point of time, my income tax is more than my tax is more than my tax in the initial years. So at that point of time, my taxable profit is higher than the accounting profit with respect to depreciation, right? So in this case, what is my accounting entry? My accounting entry will be deferred tax expense account debit to deferred tax liability. What you will create? You will create a liability. You will create a liability. Liability to the extent of what? To the extent of difference between depreciation as per Income Tax Act and depreciation as per Companies Act. Okay. So 15,000. So equal to difference between 15,000 minus 10,000 multiplied by 30%. Is that clear?
Yes, sir.
Clear? And going by the accounting profit, going by the accrual principle, 30% is the tax rate. So what should be my income tax expense? What should be my tax expense in the P&L?
12,000.
40,000 multiplied by 30%, 12,000. So इसका total 12,000 आता है क्या?
Yes.
12,000, right? So profit after. So friends, when I compare the depreciation to depreciation, it is called as a P&L approach, which I used to do in my CA Inter. Now, what is the balance sheet approach? So Ind AS talks about the balance sheet approach, and balance sheet approach means I need to compare my balance of assets and liabilities as per Companies Act and as per Income Tax Act. Now tell me one thing. If I would have prepared a balance sheet, balance sheet as per company's books, what is the balance of the machinery? What is the balance of this machinery PPE? What would have been the balance of machinery? कितना बैलेंस आएगा 31 मार्च
First year 90,000.
90,000.
91 lakh minus 1,000 gross.
Okay, Bibu. Gross block less depreciation. Gross block less depreciation. What is my gross block? My gross block is 1 lakh. What is my depreciation? 10,000. So my net block is 90,000, right? While in balance sheet, you will give these things in notes to accounts. In balance sheet, only one number will come, which is 90,000. But let me show you clearly, right? You agree with me? Now,
Yes, sir.
balance sheet as per Income Tax Act. If I will prepare the balance sheet as per Income Tax Act, balance sheet as per income tax provisions. If I will prepare the balance sheet as per income tax provision, tell me what is the balance of this machinery as per income tax provision? What is my gross block? Gross block तो 1 लाख ही रहेगा ना? Income tax में भी तो 1 लाख की खरीदी है.
Yes, sir.
What is the depreciation?
15,000.
15,000.
What is the net block?
85,000.
85,000. So the balance in companies books in Companies Act and the balance as per Income Tax Act for this PP&E is different. It's 90,000 and 85,000. It's 90,000 and 85,000. Friends, this is known as carrying amount. Right? This 90,000 is known as carrying amount. You guys know about the carrying amount, na? कई बार मैंने पढ़ा है carrying amount.
Yes.
And this is known as a tax base. Okay? These are the words which are there in the standard, carrying amount and tax base. So in Ind AS 12, instead of going by the P&L approach, instead of comparing the 10,000 and 15,000, the difference is 5,000. So यहाँ पर भी उतना ही difference है. Between 90 and 85, what is the gap?
It's 5,000.
5,000 rupees only, right? But the approach is I'm not comparing my P&L numbers. I'm not comparing the expense. I'm comparing my carrying amount as per accounting books with tax base, with the number which would have been there if the balance sheet would have been prepared as per income tax provisions, right? So the difference between carrying amount and tax base is known as a temporary difference. Okay. So the difference between carrying amount and tax base is known as a temporary difference. And when I apply a tax rate on a temporary difference, it will give me a deferred tax asset or deferred tax liability. Okay. So my carrying amount means as per books of accounts is 90,000. My tax base is 85,000. Okay. So friends, tell me whether it will be DTA or DTL, whether it will be DTA or DTL.
DTL, sir.
सर
DTL.
DTL ही होगा क्योंकि अभी DTL आपने बनाया है, डेफर टैक्स एसेट, आपने डेफर टैक्स एक्सपेंस टू डेफर टैक्स लायबिलिटी की आपने एंट्री डाली है अभी, राइट? बट लेट मी गिव यू क्विक मूल मंत्र. ओके, so friends, you have to use your both the hands. These are your hands, right? Left hand is my accounting books, right hand is my income tax books, right? So which books of accounts you maintain, accounting books or income tax books?
Accounting books.
Accounting books. Your P&L, balance sheet, annual report, financial statement is prepared as per accounting standards, as per Ind AS. You are maintaining your accounting books. Okay. In your accounting hand, sir, which hand is accounting hand, which hand is tax base? So it's your choice. ये आपकी मर्जी है. Okay. One hand is my accounting books. And what is the carrying amount of asset? What is the value of the asset in accounting books?
90,000.
90,000.
The another hand is my tax books. What is the value of the asset in the tax books? 85,000. So my tax books, my value of the asset in tax books is lower than the accounting books. मेरा जो accounting books में asset की value, it is higher. In my tax books it is lower. So what is the objective of Ind AS 12? The objective of Ind AS 12 is to match the accounting books and the tax books, is to align. So my asset is higher in accounting, lower in tax. To align, what should I do? I should reduce my asset. I can touch my accounting. I can do the adjustment in accounting books. I can't do the adjustment in tax books. Agree or disagree?
Agreed.
Agree?
Yes, sir.
So for doing an adjustment in accounting books, if I have to align my asset in accounting with the asset in tax, what should I do? I have to reduce my asset. करना
Yes,
पड़ेगा
sir.
नहीं करना पड़ेगा? I have to reduce my
Yes.
asset, right? If
Yes,
I
sir.
have to reduce my asset, what should I do? Negative asset. Negative
Credit.
asset means what? Liability.
Liability.
If I have to reduce my asset, it means I have to create a liability. So in this transaction, there will always be a deferred tax liability. Deferred tax liability. Okay. There will be a deferred tax liability. Okay. So friends, the difference carrying amount minus tax base is known as a temporary difference. Temporary difference. Right. What is the temporary difference? What is the temporary difference?
5,000.
Minus 85,000, right? And then you need to apply your tax rate. What is your tax rate? 30%.
30% on 5,000.
Right? So 30% on 5,000. Now, what is your DTL in this transaction? 5,000 multiplied by 30%, 1,500. So same number, 1,500 is there. Okay. Okay. So this is known as a balance sheet approach. This is known as a balance sheet approach, right? Number will be same. In balance sheet approach and P&L approach, the number will be same. Globally, balance sheet approach is used. That is why in Ind AS, we have also inculcated balance sheet approach. And what is this? This is P&L approach. This is P&L approach. This is P&L approach. When you are comparing depreciation and you are finalizing your deferred tax, it is P&L approach. Okay. Right. Are you guys clear or not clear?
Yes,
Clear.
I am very much comfortable on the balance sheet approach than P&L approach.
Right. Are you guys absolutely clear? Naman, Bibhu, Sanjay?
Yes, very clear.
Yes, sir.
Sagar?
Here we
Yeah.
have to do item by item,
Yes,
these
yes,
differences.
yes. So
In
this is
balance
just,
sheet.
I have shown you the trailer. The
Okay.
movie is still remaining. The movie is
Okay.
still to go. Yes. So with this example, I just want to show you the difference between P&L approach and balance sheet approach. I want to give you more comfort on this, right? And friend, this hand trick will always make you happy. Believe me, few of my student who joined the organization, right? So one of the student, so he joined my company, and one day I have seen him. He was just applying this hand trick while finalizing the deferred tax schedule in notes to accounts, right? While preparing the financial statement. So, so I asked him. So he came to me and he told me, "Sir, I have, learned this hand trick 7 years ago from you." Okay. So it helps. It will give you quick result, whether it has to be DTA or DTL. It will give you quick result. Okay. Right. And what is the accounting entry? Current tax expense account debit to current tax liability. Deferred tax expense account debit to deferred tax liability. Okay. Right. Should I write the accounting entry also, or is that clear?
Yes, very much clear, sir.
Others, is that clear? Yeah.
Yes, clear.
So friends, let's have a break. It's 8:32 now. So let's have a 13 minutes break and we'll start at 8:45, right? And then I'll cover the steps on deferred tax, okay? And then we'll discuss a lot of questions on deferred tax, okay? Let's have a break. We'll start at 8:45. Excel is visible, right?
Yes, visible.
So let's discuss the steps of deferred tax, right? Steps of deferred tax calculation. Step number 1. Compute the carrying amount of asset and liabilities. Carrying amount means as per books of accounts, as per balance sheet, as per accounting books. Carrying amount means as per accounting books, right? Compute the carrying amount of asset and liabilities. Like in this case, we have computed the carrying amount of asset and liabilities, right? Carrying amount of machinery we have computed, and how we have computed? Gross block minus accumulated depreciation. Step number 1. What is my step number 2? What is my step number 2? Tell me. अभी हमने देखा है. What is step number 2?
Yeah, tax base.
Step number 2. Compute tax base. Compute tax base of asset and liabilities. Asset and liabilities. Step number 3. What is my step number 3? You have computed carrying amount. You have computed tax base. What is your step number 3?
Difference.
Compute temporary difference. Compute ये आपके सामने ही है. Compute temporary difference. Temporary difference. Compute temporary difference. Okay. And this temporary difference and this temporary difference could be 2 types. What are the 2 types of temporary difference? What are the 2 types of temporary difference? This could be taxable temporary difference and it could be deductible temporary difference. Taxable temporary difference and deductible temporary difference. TTD and DTD, right? TTD and DTD. Taxable temporary difference and deductible temporary differences. These could be 2 type of differences, okay? Taxable temporary differences and deductible temporary differences. Compute temporary differences. It could be taxable, it could be deductible, right? Then what? Step number 4. Determine the tax rate. Okay? Because in the question, you will have given a tax rate also. Okay? And probably you will have given a tax rate for the current year, and you will have given a tax rate which is substantively enacted, right? Every year you found, every year there is a budget session, there is an income tax bill which is getting presented, right? So if before end of the reporting date, if there is a new tax slab, new tax rate which is enacted or going to be enacted, going to be approved in the parliament, but the rate has been announced, so you have to take that rate for the purpose of deferred tax calculations, okay? Because deferred tax, what is the intent of deferred tax? If you are creating a deferred tax asset, you know that I am going to get a benefit in the future, right? Means in future my tax will get lower because I paid more tax today. That is why deferred tax asset is there. What about deferred tax liability? You know that you are going to pay more tax in future. That is why this deferred tax liability is there. So in deferred tax liability, so basically you have paid less tax today and you have to pay more tax in future. That is why you have created a deferred tax liability on the temporary differences, like we have seen in this in this depreciation concept. You have claimed 10,000 in your accounting books, whereas you claim 15,000 in your textbooks. So you claimed more depreciation and you paid less tax. So when you pay more tax, so that tax will be on the basis of the future tax rate or on the basis of current tax rate?
Future tax.
Of course future tax rate ना, savings भी future tax rate के हिसाब से होगी और liability भी future tax rate के हिसाब से होगी. So basically what happened, when you compute a deferred tax, and if there is a tax rate which is substantively enacted before end of the reporting date, you have to apply the new rate. Okay, but for the current tax, since for previous year you are filing your tax return in the assessment year, right? आप यही करते हो ना? For
Yes, sir.
FY 24-25, you have filed your tax return in FY 25-26. Like I have filed my tax return in the September month of this year, pertaining to the last year up to 31st March 2025. Okay, so already the tax rate which was already there. So on that tax rate, I have paid my taxes and everything, right? But this deferred tax, if a new tax rate is enacted for the future years, so this deferred tax is going to be adjusted, going to be paid or recovered on the basis of the new tax rate. Okay, so that is why this step number 4, determine the tax rate, is there. And then after step number 4, what is my step number 5? Now I have determined the tax rate, I have applied the tax rate. Then
Create a deferred tax or liability.
Then calculate and recognize DTA/DTL. DTA/DTL, right? I need to calculate and recognize my deferred tax asset and deferred tax liability, right? These are the 5 steps. Okay, friends, in addition to this, in specific item we will read exceptions. Also. Okay, if there is any exception where DTA/DTL is not going to be created, we will cover in the specific item. You remember when I started this session, I told you guys that this is what I'm going to cover, right? Specific item I will cover in the next class. Okay, so today I'm covering current tax and deferred tax recognition measurement. Presentation part, I talked about the presentation part, like DTA/DTL will always be shown as a non-current asset, and DTA/DTL has to be offsetted. On few item you have a DTA, on few item you have a DTL. So what you will do? You will show net. आप दोनों एक साथ नहीं दिखाओगे. Like Bibu has given a question. So when I was talking about interview, Bibu has told, sir, the third question you will ask whether DTA and DTA both will present at the same time, right, Bibu?
Yes, sir.
So
In your
basically,
interview,
yes, so DTA and DTL in standalone financial statement, DTA/DTL will not present, both will not present at the same time because it has to be offsetted. Either it could be net DTA, either it could be net DTL. Okay, so these are the 5 steps on deferred tax. Right? Is that clear? So now we'll discuss one by one. Okay, and friends, so technically speaking, so with the help of few example, I will discuss this entire aspect with the help of few example. Okay. Example. ABC Limited has following transactions in place. Okay. For FY 24-25. Compute the deferred tax. So compute the carrying amount, tax base, type of temporary difference, DTA/DTL, etc. for the books of accounts ended on 31st March 2025. A. The company has invested rupees 8 lakh in mutual fund during the year. The fair value on the reporting date is 8.50 lakhs. B. The value of machinery purchased is 1 lakh. Life is 10 years. In income tax, depreciation is WDV at the rate of 20%. Right? The value of machinery purchased is 1 lakh in the beginning of the year. Okay. The income received in advance from the customer. The income received in advance from the customer for rupees 50,000 in income tax money is taxable in the year of receipt. Right? D. The company has created a provision for compensation. The company has created a provision for gratuity for rupees 1 lakh during the year. 1 lakh during the year. In income tax act. This is allowed only on the payment basis. Right? Then yes, only on the payment basis, right? So few more example I need to cover. Yes, current liabilities accrued. Yes. Just a minute. I'm taking one more example from. Yes. Yeah. Interest receivable has a carrying amount of rupees 100. The related interest revenue will be taxed on a cash basis. Interest receivable. So there is a interest receivable on one of the deposits of rupees 10,000 for rupees 10,000. the related interest will be taxed on a cash basis. So friends, this is the example, right? Now we need to compute the what? We need to compute particulars. Okay. Then, one more thing. The tax rate is 30%. 30%. However, the government has announced a tax rate of 32% for the future years, right, before 31st March. This is the question, right? Are you okay with the question? What is my step number 1? What is my step number 1? Computation of
Carrying
amount. Carrying amount. What is my step number 2?
Computation of tax base.
Computation of tax base. Yes. Step number 1 is computation of carrying amount. Step number 2 is computation of tax base. Right? Okay. Then you have computed carrying amount, you have computed tax base. Then you need to compute temporary differences, right?
Yes, sir.
So temporary differences. Temporary difference. Temporary difference. In temporary difference, I'll do two things. Number 1, type of temporary differences. So TD. So type of TD, which type? कौन से type की मैं बात कर रहा हूँ?
DTA or DTL?
Yes. Is it a taxable temporary differences in future, or is it a deductible temporary differences in future? And amount of TD. Right? So type of TD and amount of TD. Right? Then my tax rate, and then my DTA or DTL. Okay, amount of DTA or DTL. In DT and DTL, type and amount. Okay, right? Is that
Yes,
okay?
sir.
Type means is it a DTA or DTL? Amount means amount of DTA or DTL. Whether all the items, whether all these things have been covered or not covered.
Then we need to determine covered, sir.
Now point number A. The company has invested 8 lakh rupees in mutual funds. So what is the cost of the mutual funds?
8 lakhs.
Right? So this cost in accounting books and even in Income Tax Act, the cost will be 8 lakh rupees only. Yeah?
Yes, sir.
So carrying amount means when you prepare your books of accounts as per accounting standard, as per Companies Act, what is your carrying amount, right? And tax base means when you prepare your balance sheet, when you prepare your books of accounts as per Income Tax Act, then what will be your amount as per Income Tax Act? If you prepare your balance sheet as per income tax provision, तो asset और liability का amount क्या होगा? In mutual fund, so in your accounting books in Ind AS, as per Ind AS 109, the fair value of this mutual fund is 8.5 lakh. So whether the carrying amount is 8 lakh or 8.5 lakh?
8.5 lakhs, sir, in accounting.
The carrying amount is 8,50,000. The carrying amount is 8,50,000. Right? The carrying amount is 8,50,000. Okay. It is 8,50,000. Right? Because in Ind AS, these financial assets has to be measured at fair value. It is 8,50,000. What about tax base? If you prepare your tax balance sheet, in your tax, whether Ind AS 109 will be applicable? Answer is no. So tax department will say that for me, the cost of mutual fund is 8 lakh, which will always be remain at 8 lakh. When you sold mutual fund, right? And when you get the appreciation, when you actually sold mutual fund and realize the gain, then only I'll record the gain, right? यही
Yes,
होता है
sir.
ना? So
Yes,
what is the carrying amount as per income tax provision? What is the carrying amount as per income tax provision for mutual fund?
8 lakhs.
8 lakh or 8,50,000? 8 lakh. It is 8 lakh, right? It is 8 lakh rupees. It is 8 lakh rupees. Okay. So, friends, type of temporary differences. Now, what is the amount? First of all, what is the amount of temporary differences? Carrying
50,000.
amount minus tax base.
50,000.
50,000 is the amount of temporary difference. Tell me, it is a taxable temporary differences or it is a deductible temporary differences? First of all, let me make you clear. First of all, let me clarify. Taxable temporary differences means this temporary differences is creating a liability in future, right? It is creating a liability in future. Means you have paid less tax today and tomorrow you have to pay more tax, right? Means if it is a taxable temporary differences, it will be a deferred tax liability. Or if it is a deductible temporary difference, it is a deferred tax asset. So let's do reverse. On one hand, you have a accounting books. On one hand, it is your balance sheet. On one hand, you have the balance sheet, right? So friends, what is the value of mutual fund asset? What is the value of the financial asset in your accounting books? 8,50,000. What is the value of this asset, mutual fund asset, financial asset in textbooks? 8 lakh.
8 lakh.
So what you are required to do?
We need to reduce
Reduce.
carrying amount.
I have to reduce my asset. I have to do the adjustment in my books of accounts for reducing my asset. Reduction of asset means what?
Creating a liability.
Creating a liability.
Differences.
Reduction of asset means creating a liability, as simple as that.
Yes, sir.
है ना? नेगेटिव एसेट का मतलब लाइबिलिटी तो होती है. सो किस तरह का टेम्पररी डिफरेंस है ये? सो इट विल बी a DTL. So one thing is very much clear, it is DTL, right? Answer last. So सबसे लास्ट में जो आंसर आना था वो पहले ही आ गया, DTL. So which type of temporary differences is there?
TTD.
Taxable temporary differences. Taxable means liability का क्या मतलब है? Liability means payable in future. Liability is an obligation, na?
yes, sir.
Yeah. So it is a taxable temporary differences. Okay. Right. So technically speaking, if it is a taxable temporary differences, then there is a deferred tax liability. Right? Means when you sold this mutual fund, if you have a gain of 50,000 rupees, you have to pay the taxes in future. Okay. Is this clear to everyone or not clear? Please tell me.
Clear.
Tax rate. Now, which tax rate I should apply? Tax rate is 30%. However, the government has announced a tax rate of 32% for the future years before 31st March. Should I apply 30% or 32%?
32%.
Because this deferred tax is going to be paid. I mean to say this liability is going to be incurred in future, not today, right? This mutual fund is getting sold in the next year, okay? Because current year तो चला गया, current year का तो assessment अभी होके tax return बन के जमा हो जाएगा. But if I will sell this mutual fund today, I have to pay tax for this year, okay? So this DTL is going to be reversed at the rate of 32%. Now,
So it is possible to sell this mutual fund not in this year, next year or next year.
So but for future year, the only visibility is 32%, na?
Okay.
Yeah, every year this new announcement will come, na? It keep on reassessing and remeasuring.
It has
Right?
to be remeasured. Okay.
Yeah. So the only just hold on. So the only thing is in examination, the examiner will confuse you. He will give you two rates, right? So first of all, you have to apply the new rate provided it has to be announced before 31st March, means before reporting date. If it has been announced after reporting date, you are not required to take that rate. Okay?
Okay.
Yeah.
Okay.
So friends, what is my deferred tax liability amount? Temporary difference multiply by tax rate. So my DTL is 16,000. My DTL is 16,000. Friends, please let me know if you have any problem in understanding this question. I have given you a comprehensive question. Believe me, this kind of question you will not get in the study material. You will not get anywhere. Believe me. In one question, the entire steps has been covered in this manner. Friends, please let me know. Is this clear or not clear? Please let me know.
Very much clear, sir.
Sorry, Sanjay?
Carrying
Or
amount
Naman?
Not me.
Yeah, Naman?
सर एक बार कैरिंग अमाउंट वाला अमाउंट समझाना 8,50,000.
So Naman, in Ind AS 109, so basically when you appear in exam, your all the accounting standard will get completed by then, right? होगा ना complete?
Yes sir.
Yes sir, complete नहीं होगा sir, 3 times revision भी होगा. Okay? Yes. So as per Ind AS 109, this mutual fund is a financial asset. Okay? And financial asset has to be measured at fair value on the reporting date. What is the fair value, Naman?
Okay sir, 8,50,000.
8,50,000 is the fair value. This is the amount you will see on the balance sheet as per your accounting standards, as per your Companies Act. Okay. But in tax, so 50,000 is the notional gain. Tax does not consider notional gain. Tax says that for me cost is 8 lakh rupee. So in my balance sheet, if income tax officer will prepare your balance sheet, he will say that the mutual fund is 8 lakh, not 8,50,000. He said that once it is actually realized, then only I will consider the gain. But in books of accounts, we have already considered the mark to market gain of 50,000 rupees, right?
Yes sir.
Yes. Now B, the value of machinery purchased is rupees 1 lakh in the beginning of the year. What is the cost of the machinery? 1 lakh. What is the accounting entry? Machinery PP account debit to bank account. 1 lakh. What is the cost of machinery in the tax books?
Cost will be
Same
same.
contact.
1 lakh.
Same 1 lakh. भाई इनकम टैक्स के बुक्स हो या कंपनीज एक्ट के बुक्स हो, जो एक्चुअल में पे किया है वो तो सेम ही
Yes.
रहेगा ना.
Yes, it would be same.
Yes. Yeah. So machinery means PP. Now PP. So value of machinery purchase is 1 lakh in the beginning of the year. Life is 10 years. In income tax depreciation is WDV at the rate of 20%. So in carrying, what will be the carrying amount? Cost is 1 lakh and life is 10 years. What is the depreciation in the first year?
10,000.
So 90,000 is the carrying amount. What is the tax base? 1 lakh is the cost. What is the depreciation?
20,000.
20%.
20,000. 20% is the depreciation. WDV at the rate of 20% is the depreciation. 80,000 is the tax base. Okay. So 90,000 is PP carrying amount and PP tax base is 80,000. Now tell me, what is my amount of temporary difference? What is the temporary difference? Is 90 minus 80.
10,000.
Is it a deductible temporary difference or taxable temporary difference?
Deductible, the taxable temporary difference, TTA.
Your accounting books asset is 90,000. Your tax books asset is 80,000. What should I do? I should reduce my asset. Means I have to create a liability. I have to create a liability. If it is DTL, it is a taxable temporary difference. What is the tax rate I have to use? Same 32%. So what is my DTL amount? Temporary difference multiply by tax rate.
3,200, yes.
3,000. Now, income received in advance from the customer for rupees 50,000. What is the accounting entry? Naman, please tell me the accounting entry for income received in advance. Advance received from customer का accounting entry क्या होगा? Naman, what is the accounting
Account
entry?
debit to income received in advance.
So it is bank account debit or cash account debit to income received in advance or to unearned revenue. Can I say unearned revenue?
Yes sir.
Or can I say to advance from customer? Yeah.
Yes.
You are okay now? Okay.
Yes sir.
So what is the accounting entry? Accounting entry is, I can say that cash account debit 50,000 ही था ना, 50,000 to unearned revenue or advance from customer, right? To unearned revenue or advance from customer, 50,000. Okay, so advance from customer, or let's say unearned revenue. Where this unearned revenue will show in the balance sheet? This unearned revenue or advance from customer is what? It is asset or liability?
Liability.
It's a liability. You guys are hardcore chartered accountant. It's a liability. Very good. Yeah. So it's a liability. My dear friends, what is the carrying amount of this liability in your balance sheet? This is the accounting entry you guys told me. So balance sheet में क्या number आएगा? 50,000 का number आएगा यार. Liability का और क्या आएगा? 50,000. Yes.
50,000 is.
Yes, sir.
Yes. 50,000 is the liability, unearned revenue or advance from customer. One line is given here. In income tax, money is taxable in the year of receipt. Instead of money, I should write in income tax, income is taxable in the year of receipt. Right. So going by the accrual principle, in your books of accounts, you have not recognized income. That is why you have shown advance from customer. Right. Because probably you have not completed your performance obligation. You remember performance obligation? कहीं पे हमने पढ़ा था performance obligation. मुझे याद नहीं आ रहा.
Yes, sir.
Which index?
In
115.
115.
Contract revenue from
आप लोगों को सुना लग रहा है ना, मेरे को सुना लग रहा है.
and employee benefit में भी.
Okay. So performance obligation. Employee benefit में performance obligation. अच्छा, आपने वो present obligation, defined obligation वो सब पढ़ा होगा आपने. Yes. So performance obligation. When performance obligation will be satisfied, then you have to recognize the revenue, right?
Yes,
So
sir.
in Companies Act, in books of accounts, you have shown advance from customer or unearned revenue because performance obligation has not been satisfied. Now my question to you guys is, in income tax, this money received has been taxable in the year of receipt. So what is the tax base of this 50,000? What is the tax base? If income tax department would have been prepared a balance sheet as per income tax provision, what should be the tax base of this transaction?
Tax bill will be 0 because
Or
it has already been paid.
Or let me ask you in a different manner. This advance from customer, this advance has been received from customer for 50,000 rupees during the year. And the company has satisfied the performance obligation also during the year. Tell me whether any amount will come in the balance sheet if the company would have recognized the income, whether any amount will come into the balance sheet as an advance from customer or unearned revenue.
No, sir.
No. So in income tax, what income tax is treating? Income tax is treating this as an income in the year of receipt only. So in income tax balance sheet, whether this advance from customer or unearned revenue will come, answer is no.
No.
So what will be your tax base? Your tax base will be, what will be your tax base? Your
0.
tax base will be
0.
Your tax base will be 0. Your tax base will be 0, right? So your tax base will be 0 means, if you think technically, you have already paid tax in advance. Yes or no? In your
Yes.
accounting books, you will recognize income in the next year.
Yes.
Right. So when you recognize income in the next year, whether you will pay tax again in the next year on this income of
No.
50,000?
No.
No. Means you have paid more tax this year. So it
Yeah,
means it is a
deferred tax asset.
deferred tax asset. Or just use the lemon hand trick. Liability. Now it is liability. My liability in the books is 50,000. My liability in the tax is 0. So what should I do? I should reduce my
Liability.
If I need to reduce my liability, what should I take?
Debit. We will debit it.
Deferred tax asset. So it will be your deferred tax asset. It will be your deferred tax asset. If it is a deferred tax asset, which type of difference is there? What is the difference? Difference is 50,000 minus 0. Which
Deductible.
type of difference? Deductible.
Deductible temporary.
Deductible temporary difference. मेरे प्यारे दोस्तों एंड भाइयों, क्या आपको इस समझ में आ गया?
Yes.
What is my tax rate? 32%. What is my deferred tax asset? Temporary difference multiplied by tax rate. Now D. Yes, D. And what is this? The company has created a provision for gratuity. Now you guys need to help me quickly. I'm getting bored. Provision for gratuity. Yes. What is my provision for gratuity? I have computed my provision for gratuity using Ind AS 19, using accrual principle, actuarial valuation. What is the carrying amount of gratuity liability?
1 lakh.
1 lakh.
1 lakh. In income tax, if I would have prepared the balance sheet as per income tax provisions, if my income tax officer will prepare the balance sheet for me as per income tax provision, what he will say? Whether he will say any liability on account of gratuity.
No, sir. He will not allow.
He is saying, I don't know accrual principle. What is actuarial? I don't know. I never read Ind AS 19. He said, see, I will only account for gratuity when you are paying gratuity. Otherwise, it's an intangible item. I am not able to see gratuity. Where is gratuity? Right. So income tax officer is not able to see the gratuity. He says that this is a notional concept. I don't know what you guys are doing. Provision, creating, debiting in P&L, creating a liability. So what is the tax base for this liability in income tax?
0.
0. Right. Or in income tax, he is not considering your expense. He is disallowing your expense. Means you are paying more taxes today. The benefit you will get when in future. Right. So now let me reconfirm my understanding whether it will be DTA or DTL. My liability provision for gratuity is 1 lakh. My liability in income tax books is 0. What should I do?
DTA. Reduce it.
I should reduce my liability.
Reduce it.
So I need to create my DTA. So which type of temporary difference is there? Deductible temporary difference. Which asset will arise? DTA will arise. Right. What is the temporary difference? Temporary difference is this minus this.
1 lakh.
What is the tax rate? 32%. What is my DTA amount? 32,000. Right. Now, point number E. There is an interest receivable on one of the deposits of rupees 10,000. There is an interest receivable on one of the deposits. Interest receivable of rupees. Let me clarify this. Interest receivable of rupees 10,000 on one of the deposits. Right. The related interest revenue will be taxed on a cash basis. The company has made a deposit in State Bank of India, and the company, going by the accrual principle, the company is creating an interest receivable on the deposit. What accounting entry need to be passed? Sagar, what is the accounting entry on recognizing an interest, accrued interest? Accrued interest को recognize करने की accounting entry क्या होगी?
Interest receivable account debit to interest income.
Interest receivable account debit to interest income account, right? To interest income. So there will be a accrued interest or interest receivable asset, right? Interest receivable. asset. Interest receivable asset. Okay. So interest receivable asset. Now, what about income tax? So interest receivable asset of rupees 10,000. In your carrying amount, in your balance sheet, this accrued interest asset will come in your balance sheet for rupees 10,000. What about income tax? Income tax officer is preparing this balance sheet as per income tax provision. So what is the amount? What is the tax base of this interest receivable?
Zero.
Why?
It is already taxed.
It is already
Taxed
No,
It
cash
is not already taxed.
received.
on cash basis.
Cash
So
not received.
it is not received now. So why it is accrued, Sanjay? It is accrued because it is not received.
They are not received, yes.
And income tax
Receivable.
provision says that the related interest revenue will be taxed on a cash basis. मतलब जब मिलेगा तब tax होगा.
Yes, yes.
So income tax officer is saying that, see, I am a simple person. I don't know accrual method of accounting. I don't know accrual. I don't know accrual principle. I know only cash basis of accounting. So what you are saying, I'm not able to understand. You have deposited 1 lakh rupee in State Bank of India. Very good. So when you will mature, when you will redeem your deposit, you will get an interest. Very good. So when you will get an interest, I will charge tax. I will pass my accounting entry when you will actually receive interest. I don't know what you are doing. You are just accruing. So what is the tax base? What is the tax base of under income tax provisions of this asset? Zero, right? It's zero. So what is my temporary difference? My temporary difference is 10,000. Now tell me, is it deductible temporary difference or taxable temporary difference?
Deductible.
Deductible or taxable? It's an interest receivable is an asset. So in accounting books, 10,000 rupees of asset. In tax books, zero asset. What should I do? Sagar, what should I do? My asset in accounting books is 10,000. My asset in tax books is zero. What should I do? Going by the matching concept, do I
You
need
would
to reduce the asset or not?
reduce it.
If I need to reduce the asset, what does it mean?
DTA,
Means creating
DTL.
a liability. Negative asset means liability, na? So it's a taxable temporary differences. DTL will be created. DTL will be created. फ्यूचर में टैक्स पे करना है. जब इंटरेस्ट आएगा तो टैक्स पे करूंगा. द लायबिलिटी विल बी इन फ्यूचर. यस और नो?
Yes, sir.
Yes or no? Yes, sir. Right? So what is my DTL 3200? Friends, please let me know if you have any doubt. Please let me know. This is a very layman trick. Very layman. You have to do the adjustment in your accounting books. In your accounting books, if your asset is higher than your tax books, then your tax base, what should you do? You have to reduce your asset. Reduce your asset का मतलब क्या है? Negative asset का मतलब क्या है? Liability. If your liability is higher, then
We have to reduce the liability.
you have to reduce the liability. Reduce your liability. Negative liability means
We have to debit it that create the tax deductible temporary difference.
right? You have to reduce it. Right? So this is something which you need to do. Okay. So let me give you one more example here. F. The company has incurred preliminary expenses for rupees 1 lakh during the year. In income tax, 1/5 deduction will be 1/5 deduction will be allowed in every year. Good question or not a good question?
Good question, sir.
Good question, sir.
Yes. Have you heard about this concept of preliminary expenses, section 35D? I don't know my memory is correct or not, but section 35D in our days, there was a section 35D. So
Yes,
it
sir.
talks of, yeah?
35D is amortization of preliminary expenses. Talk
Yes.
about that.
Amortization of preliminary expenses. So 1/5 deduction will be allowed. While this concept of preliminary expenses does not exist in accounting standard, in Ind AS does not exist. So in the year when you incur preliminary expenses, entire expense has to be debited in the P&L, right? There is no carry forward. But in income tax, the concept exists. And if you have expensed of 1 lakh rupees during the year, you will get a deduction of 20,000 rupees every year for the 5 years. Okay.
Sir, as per Index, we cannot carry forward the
No.
preliminary
Not
expenses.
not even Ind AS, not even accounting standard. दोनों में नहीं है, right?
Okay.
So it has to be recognized as an expense in the year of incurrence. Okay. Complete amount has to be charged off to the P&L. It cannot be carried forward. वो आपका
Yes, sir.
intangible asset की definition meet नहीं करता. Okay.
Yes, sir. Yes, sir. But the thing is, 150 is allowed the 20 percentage for 5 years. There is one more provision is there income tax. For companies, maximum limit 5% of the cost of capital or 5% of capital, whichever is higher.
That is okay, Saminathan. We were not getting into the nitty-gritties
Much
of that.
concept. We will
Right?
take a
Yeah. We are not getting into those nitty-gritty. As I told you, your income tax knowledge could be more than my income tax knowledge. That is number one, because I am expert of financial reporting. Number two, you are not required to apply your that kind of knowledge in financial reporting. In financial reporting, I am just looking like a horse. The company has incurred preliminary expenses of rupees 1 lakh during the year. So I know that it has to be charged as an expense in the year of incurrence as per Ind AS. Okay. In income tax, 1/5 deduction will be allowed. That's all. My job is over. Okay. Right,
Sir, here
Saminathan?
we have to apply
Yes, sir.
only
Correct, sir.
our concept, and income tax concept will be given there.
Yes. So Saminathan, while what you are telling, that is absolutely correct from the income tax perspective. Okay. But from the financial reporting perspective, we have to use only 1/5 deduction. Right? If that point has been given here, Saminathan, cost of capital, this, that, then you should apply. Otherwise, you should not apply that. Okay. Yeah.
Perfect, sir.
Yeah. So these things are very important, because otherwise, when you being a student, when you know everything, right? So you get just muggled up. Oh, should I apply this? Should I apply this? You have to be very clear where you are. Okay. So friends, tell me, what is the carrying amount of preliminary expenses in the balance sheet? कभी ये balance sheet में आएगा क्या?
नहीं सर, P&L से
No.
रूट होके चला जाएगा.
No, it will never come in your balance sheet. It is not your asset. It is not going to be amortized. So in balance sheet, the carrying amount is 0. This is a classic case where carrying amount will be 0 when you prepare your balance sheet as per Ind AS. But when your income tax officer will prepare your balance sheet as per income tax provision, he will have some amount in the asset side. So money has been paid. 1 lakh rupee cash has gone out, right? So what income tax officer will show in his balance sheet? वो क्या दिखाएगा बैलेंस शीट में? Tell me.
Balance 80,000.
He will show 20,000.
At the end of year 1, Saminathan,
Balance will be 80,000 in the income tax.
at the end of year 1, so Saminathan, during the year, what amount you have expensed? 1 lakh?
Yes, 1 lakh.
Yes. Give me objective answer only. 1 lakh? Yes. What is the 1/5 of 1 lakh?
It's
20,000.
20,000.
So what is the deduction which is getting in the first year? 20,000.
20,000.
So I am thinking from an income tax perspective. Forget about the books of accounts. In books of accounts, we are very much clear that
Yes,
this
sir.
entire expense has gone to P&L. So nothing is going to be amortized, no asset, right? Zero asset. But in income tax, I have paid 1 lakh rupee, but I have but 20,000 depreciation or amortization is allowed on this. So what is my carrying value at the end of the first year in Income Tax Act for this asset?
It will be 80,000.
1 lakh minus 20,000, 80,000. Means at the end of the first year, I will get a benefit of 80,000 in the next 4 years, 20, 20, 20, 20. Right? So in my accounting books, my profit is reduced by 1 lakh rupee, but in my tax books, my taxable profit is only reduced by 20,000 rupees. Right? I will add back entire 1 lakh rupee and I will reduce 20,000 rupees. Right? Means in income tax, I am paying more tax today. Yes or no?
Yes, sir.
Because I'm giving an allowance of only 20,000 rupees in income tax, whereas in Companies Act 1 lakh was allowed in the first year itself in P&L, right? So what will happen? So this is an asset, this is not a liability. So should I write the nature of asset also here? Nature of asset, should I write? नेचर ऑफ एसेट भी लिखूं मैं यहां पे या छोड़ दूं? लिख देता हूं, राइट दोस्तों? नेचर ऑफ एसेट, नेचर ऑफ आइटम, this is asset, this is asset, this is liability, this is liability, this is asset, and this is asset. Okay, so friends, my carrying amount, this is my accounting books. My carrying amount of asset is 0. My tax books is 80,000. What should I do? What should I do?
Yeah, we need to create it. We have to create the asset.
We need to create asset. So we need to create asset means we need to create a DTA. We need to create which asset? DTA.
DTA.
Which kind of difference is there? Which kind of temporary difference is there? Taxable or deductible?
Deductible.
Predictable.
Deductible temporary difference. In the next 5 years, you will get an allowance of 20,000 rupees every year. Right? Deductible temporary difference. Okay. In the first year, you paid 1 lakh, but you got a deduction of 20,000 only. Means 80,000 has been disallowed. Means in the first year, you have paid more tax on 80,000. Now you will get a deduction of 20,000 in the next 4 years. Okay. Is that clear or clear?
Very much clear.
Clear, sir.
Clear. What is my DTA amount? What is my DTA amount? My DTA amount is 25,600 as on what? As on 31st March 2025. Friends, I believe with this example, you guys are very much clear on computation of carrying amount, on computation of tax base, type of temporary differences, what is meant by taxable temporary differences. As the name suggests, this temporary difference will give you tax liability in future. Deductible temporary difference, as the name suggests, this temporary differences will give you recovery of tax in future. Okay. And when there is a taxable temporary differences, there is a deferred tax liability. When there is a deductible temporary differences, there is a deferred tax asset. And when you apply the tax rate on the temporary differences, you will get your DTA or DTL. Now, what is my total? What is my total of DTA and what is my total of DTL? मेरा DTA DTL का total क्या है? So notes to accounts, in balance sheet notes to accounts, in balance sheet notes to accounts. How this balance sheet notes to accounts will be presented in balance sheet. In balance sheet. So in financial statement notes to accounts, How this is presented in the notes to accounts, let me tell you. So items on which DTA is there means deductible temporary differences. Right? So items. On which item this is there? On which item DTA is there? On which item? Guys, on which item DTA is there? Can you please tell me?
Yes, sir.
Advance from customer.
So So DTA is there on which item? On mutual fund, what is there? DTL. So DTA
DTL.
is there on item number 3, 4, and 6, right? 3, 4.
Yes,
Yes.
sir.
So on these item, DTL is there. Okay. So and preliminary expenses DTA is there, right? So on these item DTA is there, correct? Correct. Temporary difference and
Yes,
Yes.
yes, sir. There are three items.
DTA oblique DTL. So here am I right ना? इसी पे है ना?
Yes, sir.
So what is my total of DTA? My total of DTA is 73,600. DTA total, right? So now on these items, DTL is there. Okay. DTL total. DTL total. So what is my net DTL? So net में क्या आएगा? DTA आएगा, DTL आएगा. What will be there in net?
DTA.
So this will be your notes to accounts. So items on which DTA is there, items on which DTL is there. DTL is there. Net DTA will be coming in the balance sheet. Taxable temporary differences. In your balance sheet, what will come into your balance sheet? In your balance sheet as at 31st March 2025. Okay. Balance sheet as at 31st March 2025. And here your assets will be there. In your asset side, non-current asset will be there. I told you ना, क्या बताया था मैंने? Deferred tax asset and deferred tax liability will always be non-current. As per which paragraph? Of which standard? फटाफट बताओ.
Para 56.
Oh, nice. Para 56 of Ind AS 1.
India's one.
Para 56 of Ind AS 1. You guys are eating badam on daily basis. I think so. T1200. Yes. So this is balance sheet presentation, and this is your notes to accounts presentation, right? And this is your computation, carrying amount, tax base, type of temporary differences, amount of temporary differences, applicable tax rate, and type of DTA DTL and amount of DTA DTL. Friends, this example gives you a complete clarity. This is end to end. This is end to end. Okay. Right? I hope this is clear to each and every one of you. Is that clear or not clear? Please let me know.
Clear.
Yes, sir. Very much clear, sir.
Yeah, very much clear. Okay. Great. So friends, we discussed all these concepts of DTA, DTL. Okay. So friends, this deferred tax asset has to be created on the temporary differences, and it has to be created on carry forward of business losses also. Right? आपने AS 22 में पढ़ा था. So when you have a business losses, on the carry forward of business losses, you can create a deferred tax asset. Why we are creating a deferred tax asset on the business losses? Why?
Because we will carry forward and set off against the future income.
Today you have a 1 lakh rupee of taxable loss. Okay. Today. Do you require to pay any tax if you have a tax loss today?
No, sir.
No, not required. Tomorrow means, when I say today means current year, tomorrow means next year. So in the next year, you will earn a taxable profit of 1.5 lakh rupees. Okay. the accounting profit is also 1.5 lakh rupee, assuming taxable profit is also 1.5 lakh rupee. Do you require to pay the tax on 1.5 lakh rupee in the next year?
No, sir. We have loss already.
So this loss which was there in the last year, you will carry forward your loss and set off from the same head of income, right? From the
Yes,
same
sir.
head of income, till how many years we can carry forward and set off the losses? 8
For
years?
8 years,
Last 8 years, sir.
8 years, right?
other than speculated.
Yeah, other than speculated and blah blah blah. So 8 years, okay? So friends, current year, last year loss was 1 lakh rupee, current year profit is 1.5 lakh rupee. You will set off 1 lakh rupee of loss from the last year which you have carried forward. Now you have to pay tax only on 50,000 rupees. Means even in the last year when you had a losses, right? When you had a losses in the last year, still you have some profit out of some losses. You have some profit out of some losses. And what is that profit? The profit is less
Tax.
tax
Yes, sir.
benefits in the future year. Tax benefits in the future year. Right? आपने वो सुना होगा ना, जीत के हारने वाले को बाजीगर कहते हैं. Have you seen that movie बाजीगर?
Yes.
Yes, sir.
Have you seen? Have you heard this word? There is a success in every failure. Yes, there is a success
Yes.
in every failure. There is a success. When you learn things, when you had a failure, you will learn from the failure. You will learn from the failure. Believe me, so I met one of the student, right? And just last year, I met one of the student. So he came to meet me and he failed 2 times due to some situations. Okay. He failed 2 times. And it was me who has told him that, you should appear in the exam. While some situations were different, but I forced him to appear in the exam. Right? He appeared in the exam for 2 times and he got failed. In the third time, he got a rank. Third attempt, he got a rank. So he asked me a question that, sir, you know the situation of my house and you forced me to appear in the exam. Why? So I asked him the same question that, tell me, what is your learning out of the 2 attempts which you have given and you have failed? So he told me, sir, 2 best thing was happened. Number 1, when I attempted the paper 2 times, so I had an experience of appearing in the exam, right? To just to face that kind of a culture, to face that kind of experience, write the paper for 3 hours. And number 2, it was like a complete rehearsal that when that I have tried my level best to get up to prepare for the exam and get appear in the exam. Matlab mindset change, right? So when my situation will get better, okay, my situation got better. And in the third time, when I started preparing for the exam, it was less preparation, more revision. Preparation कम थी, revision अच्छा था और ज़्यादा था revision, right? And this is how I was able to secure the rank. So I told that guy that, Devanshu, this was the reason why I told you to appear in the exam, right? And while you got failed 2 times, and I know the situation was something else, right? But in those failures, you got a success in terms of rank which you have secured in the third attempt, right? The preparation, the kind of enthusiasm, the kind of stress which you have handled, right? These were kind of the gain which you have earned from those failure. So what I'm trying to say here, even in terms of the tax losses, there are some gain in the future in terms of offsetting these losses in the profits, right? Up to 1997 or 1993, Reliance used to buy the sick units which were into losses. Why? Because Reliance is a profitable company. They got the tax, they got the benefit of those losses in their profitabilities, right? So Reliance used to take saves. They got the tax synergies. Okay. So friends, that is why the standard says that the deferred tax asset will be recognized on the deductible temporary differences and on the carry forward of unused tax losses and carry forward of unused tax credits also, right? So friends, these two part we will cover in the specific item, a special item, that when this carry forward of losses, when the DTA can be created on the carry forward of losses. So standard talks about some criteria that when there is a probability that you will get a profit in the future. Tell me one thing. So the company has a losses in the current year and the company does not have any probability to get profitable in the next 10 years. Will you recognize deferred tax asset on this carry forward of losses?
No, sir, no.
So the idea of creating a DTA is to have a future economic benefit. If the company will not be able to achieve profits, how will you offset? How will you carry forward and set off these losses into the profits? Profit ही नहीं होगा, right? So the standard has given you some degree of determination. Standard has told you that if there is a probability of recovery of deferred tax asset, if there is a probability of setting off the tax forward losses, then only you need to create a DTA on the unused tax losses and unused tax credit, otherwise no. Okay. So we will cover this in the specific items. Deferred tax liability, it is a liability. Liability is an obligation. The DTL has to be created for all taxable temporary differences. Okay. This is what we discussed: carrying amount, tax base. Okay. The difference is temporary difference. Temporary difference multiplied by tax rate is equal to DTA or DTL. Okay. DTA or DTL. This is just a English. The concept of this hand trick will always help you in your student life and in your professional life. Always help you, right? Always help you. Okay. So these all examples I have already covered in my Excel file. All these example of PP, interest receivable, trade receivable. Okay. Trade receivable has a carrying amount of rupees 100. Debtor, you have a debtor balance of 100. The related revenue has already been included in the taxable profit or tax loss. Okay. So when you sold goods to debtor, what is the accounting entry? Debtor account debit to revenue?
Yes.
Or to
Debtors
sales?
to revenue. Yes.
Debtors to revenue. If income tax officer will record this transaction, what accounting entry income tax officer will pass? सेम एंट्री तो होगी, जनरल एंट्री तो सेम ही होगी ना, डेटर्स कस्टमर और डेटर्स टू रेवेन्यू वही तो होगी, वो भी तो वही करेगा, सेम रेवेन्यू पे तो टैक्स देगा वो भी, राइट? So the carrying amount and the tax base of this data, whether it will be same or it will be different,
it will be same only.
It will be same. So now let me complex this question. So the carrying amount and tax base is 100. You are right. The company has created a provision for doubtful debt of 20 rupees. What is the carrying amount in your books of accounts? 80. 100 minus 20. 80 दिखाते हो ना आप? नोट्स टू अकाउंट्स में दिखाते हो ना कि डेटा सन्डे डेटा और ट्रेड रिसीवेबल अकाउंट 100 rupees, less provision for doubtful debt 20 rupee. In your balance sheet, the carrying amount is 80 rupee. But what is the tax base in your tax balance sheet? 100 rupees. Because tax officer will say that I don't need this provision. I don't know what you guys have done on accrual basis. No. When your money has actually gone bad, जब आपका पैसा एक्चुअल में डूब जाएगा तब मैं बेनिफिट दूंगा, आज मैं कोई आपको बेनिफिट नहीं दे रहा. So your carrying amount in books of accounts is 100 for this asset of debtors, but your tax books talks about 100 rupees. Your carrying amount is 80, tax books is 100. So what you are required to do?
We have to
in
increase
the
the top.
DTA.
We
Increase
have to
in
increase
DTA.
the asset. Increase the asset. कौन सा asset? क्या मैं customer data बढ़ा लूं? नहीं. We have to increase the
DTA.
asset, which is DTA. DTA, right? DTA.
Yes, sir.
So many examples we have covered, my dear friends. Tax base liabilities we have discussed. Current liabilities include accrued expenses with a carrying amount of 100 rupees. So there are some accrued expenses, 100 rupees, liability 100 rupees in the books of accounts. The related expense will be deducted for tax purpose on a cash basis. So tax officer says that I don't know what is this accrual basis in accrued expenses. So for me, accrued expenses is 0. But in your books of accounts, liability is 100. What should you do?
Reduce.
Reduce liability means create
Create asset.
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 DTA, deductible temporary differences. Okay. So tax base of the accrued expenses nil. So friends, now will you be able to determine the tax base or not? Simple, very, very simple. If tax officer will prepare a balance sheet as per income tax provision, तो उस asset और liability का tax value क्या होगा? Simple. Simple. Okay. Yes or no?
Yes,
नहीं आया
sir.
समझ?
Double S.
Yeah. So let me write this in your Excel file. Excel file पे लिख देता हूँ इसको. ठीक है, वहां और कवरेज आ जाएगी. Okay. G. Current liabilities. Okay. Instead of 100 rupees, should I make it at 5,000 rupees? Okay. Yes. G. Current liability. Accrued expenses. Liability. So what is the carrying amount? 5,000 rupees. What is the tax base? Tax department says that I will allow only on the payment basis. Tell me what is the tax base?
0.
0 is the tax base. So 0 is the tax base, whether it is deductible temporary difference or taxable temporary difference. Liability books 5,000 tax 0. I need to reduce my liability. I need to create my deferred tax asset. Deductible temporary differences. Deductible temporary differences. So DTA. Guys, you are disappointing me. You are not quick. I thought after this hand trick you will be very quick. ये हैंड ट्रिक एक बार समझ में आ जाए तो वैसे माइंड से ही आंसर निकल जाएगा, राइट? So DTA. So let me write the DTA here. What is the amount? Okay, this is DTA. Is that clear? Should I cover the trade receivable example also? Should I cover this trade receivable example also?
Yes, sir.
Yes, sir. It will be on revision. It will be useful.
बिभू का हमेशा रहता है दिल मांगे मोर.
ये दिल मांगे मोर.
The trade receivable was recorded during the year for rupees 40,000. The company has created provision for doubtful debt of rupees 5,000 on one of the debtor, right? Yes, trade receivable. What is my trade receivable amount? Trade receivable. What is my trade receivable nature? Asset. What is my carrying amount? Can you tell me quickly what is my carrying amount?
It will be 35,000.
40,000 minus 5,000. Net of net of provision for doubtful debt, right? And what is my tax base?
40,000.
Because income tax does not know provision for doubtful debt. So my carrying amount, asset carrying amount 35,000. In my textbooks it is 40,000. What should I do?
So we need to increase it.
We
Increase.
need to
Increase the asset.
increase. We need to increase the asset. Increase the asset means DTA.
Deductible.
We need to create DTA, deductible temporary difference, right? We need to create DTA. We need to create DTA. Okay, DTA. This has become very comprehensive. Okay. So trade receivable. So now let me cover here trade receivable. Trade receivable. Okay. So what is my temporary differences on trade receivable? Okay. So this is what it is there. Friends, if you will just with this Excel file, believe me, except a specific item, whatever I have taught you till today, if you will just revise this Excel file, believe me, conceptually, you will be able to crack any question on deferred tax in the exam. Conceptually. Just right. A specific item I will cover in the next class. Okay. But this is good for everything. Everything. This is the concept. This is the base. This is good for everything. Okay. Right. Is that clear? Is that clear?
Clear.
So with this, let me conclude today's session. Okay. I think Shilpa ma'am is there. Shilpa ma'am, would you like to say anything? Or should I conclude the session? Okay. So guys, if you have any question, I would be happy to answer. Otherwise, I will conclude the session.
Thank you so much, sir. Have a great day.
Thank you so much. I hope you guys have understood it very clearly. I hope so.
Yes, understood clearly.
Great.
Crystal clear, sir. You explained everything. A to H, all the point very clear.
Thank you so much, friends. Thank you so much. We'll meet in the next class and we'll complete this this standard. Okay. Thank you. Bye bye. Take care.
Yeah, thank you.
Sir, thank you, sir.